It's a Jekyll and Hyde thing. Look at the market today, right? Big day. But it has been a wild ride all this week. Look at that. And that's got investors wondering what to do. Dive in, stay out, go cautiously. Money manager Jim LeGant, personal finance guru Larry Winget, and Fox Business Network's own Melissa Francis. You see it all the time, right, Melissa? I mean, it's so volatile. What do people do? Do they just see this and say, that's one reason why I'm not in?
No, that's why you should be in and just stay calm and not go crazy and yank your money out of the market. I mean, I think right now investors are trying to gauge what the Fed is going to do. And every day there's a new signal. I mean, when the economy looks like it's strong, it seems like the Fed's going to raise rates. They flee. When it looks like it might be weak, then they say, oh, it's okay. We can stay in the market for a while. It's insane. You got to just stay calm. Yeah. Don't panic.
Easier said than done, right, Jim, though, because a lot of young people, I guess there's record low participation on the part of young individuals. I don't know whether they're just jaded, angry, they're out of money, all of the above, but they're not in this. What do you make of that?
Well, if you're young enough, you remember the stock market crash in 2000 and 2002, and you remember what happened in 2008. So a fair part of the time that you've been spending watching the markets have been in nasty corrections. But I think Melissa's right. I think this is all about what the Federal Reserve does with interest rates. And if you look at what is going on in the economy, it's not doing that great. It's kind of plodding along at a drunkard's pace. It's moving in the right direction, but not near fast enough for the Fed to be emboldened to raise interest rates. And look, we've got higher interest rates than everywhere in the world. So even if the Federal Reserve raises interest rates, it doesn't mean that our mortgage rates are going to go up or lending rates are going to go up or all the other interest rates that really impact the economy are going to move very much. I don't think they are. And if that's the case, stocks are really still the only game in town. And valuations aren't so high. In other words, the market isn't selling at a price level that's so high that it's too daunting yet.
But, you know, Larry, we do have this victim mentality in our culture. That's not just reserved for the young. It's a lot of people feel, I think it's a rigged game. I think I've seen myself burn. I've seen my parents burn. And I'm just, I'm not going to say. I'm not going to put it away because it won't matter anyway. They get very defensive. What do you tell kids? What do you tell young people? What do you tell all people who subscribe to that view?
Well, I think it's a darn shame. We're all going to get old, Neil, and you're going to look around and you're going to need something to retire on if you don't want to work until you die. I agree totally with Melissa on this. People need to take a deep breath, calm down. Investments are over a long haul. And if you sit around and try to figure this out day by day, it can have grave, serious consequences with your money, but mostly it'll drive you nuts. So just take a deep breath.
And Neil, I'd like to point out, if you're doing a 401k plan, these fluctuations in the market are really your friend. I mean, think about the market that you had in 2000 and 2002. If you were buying every month into the market with your 401k contributions while the market was down, you really did well. Same thing in 2008. So if you're young, these fluctuations in the market should be welcome in many respects because that's when you can buy.
I mean, what's the alternative? Social Security, I've been taught since I was very young, is not going to be there by the time that I need to retire. I can't depend on that.
The housing market,
that's a different story. That's a different story. The housing market isn't what it once was. I mean, now when you buy a house, it's probably not an investment. It is the place that you're living, and that's what you're really paying for. So what are you going to do? I mean, you need to be in the market, you need to be aware, and you need to be diversified, but I don't know. Hopefully I have a long way to go. So I'm trying to, sort of spread it out and plan for the future. But
Larry, a lot of people look at the system. They look at what's going on. We were talking about housing a second ago there. A lot of people don't want anything to do with housing, which could explain why housing really isn't still moving that much. So what is an investor? What's someone to do? What do you tell people who are maybe so risk averse that they just don't want to deal with any of this?
I tell people to check their willpower in all areas of their lives, because if they think that they can just save that money and that it will be there, I mean, without earning any money or any interest or anything or making any money on their money, if people think they can just put it away and it will be there, they are crazy. They will figure out something to spend that money on. So you've got to be in the market. You've got a lot of different vehicles out there, but you're going to have to trust at some point more than just hiding it underneath your mattress or putting it in the bank or buying a CD with it.
All right, guys, I want to thank you all. In the meantime, I want to take a note of my colleague and buddy, Melissa.